Hello guys, we have some major news to discuss today. The latest updates on Nio's partnership with CATL are a game changer. But before we get into that, we have to talk about the delivery numbers for the past week. Nio recorded 2K deliveries, while ONVO managed 1,300, bringing the total to just 3,300. To be honest, these figures are not exactly impressive. In fact, they fall short of expectations, especially considering ONVO's earlier projections. Now, the CEO of ONVO has addressed concerns regarding the weak sales figures, and there's a looming question about whether he will step down. If you remember, he had confidently stated that ONVO would achieve 20K deliveries this month. That's a promise he made publicly. However, it is now quite evident that ONVO is not even close to reaching that milestone. Let me emphasize this again: ONVO will not hit the 20K deliveries that were promised. And given that the CEO himself had vowed to step down if they failed to meet this goal, many are now wondering if he will follow through on that commitment. Well, as it turns out, he won't. Instead, he has reflected on his approach, admitting that he may have been overly ambitious and has learned to be more cautious with setting targets in the future. He has essentially apologized for the situation, but it raises the question: does an apology truly compensate for failing to meet such a crucial milestone? The bigger issue here is that ONVO's current sales numbers indicate a much larger problem. Selling only 5K cars per month is simply not enough to reach profitability for the ONVO brand. Keep in mind that ONVO operates its own independent stores, has its own dedicated sales team, and functions separately from Nio in many aspects. With such significant operational costs, how can they justify these expenditures without achieving much higher sales figures? The math just doesn't add up. Looking ahead, ONVO does have future product releases planned. The ONVO L90, a larger model, is set to enter the market, and there is some optimism that it might even outperform the ONVO L60 in terms of sales. However, based on the current trajectory, it is clear that ONVO has an uphill battle ahead if they truly want to reach 20K deliveries per month and finally turn a profit. Now, shifting gears to Nio's recent deal with CATL, we have some significant financial developments. The agreement involves an investment of up to 2.5 billion RMB, which CATL will allocate towards working collaboratively with Nio to expand the battery swap network. This deal is significant for several reasons. Firstly, it serves as a strong validation that battery swapping is indeed the way forward, reinforcing the potential of this technology in the EV market. Secondly, Nio receiving additional funding is always good news, as the company continues to require capital for expansion. One of the most intriguing aspects of this deal is how it relates to Firefly, Nio's budget EV sub-brand. Future Firefly vehicles will be compatible with CATL's chocolate battery swap system, which is quite interesting. However, this doesn't apply to the current generation of Firefly vehicles that have already debuted. This means that existing Firefly models will require separate swap stations built specifically for them, as they are not compatible with CATL's universal chocolate battery swap stations. This situation creates an interesting dilemma. If you are considering purchasing a Firefly vehicle, this raises the question: will the second generation of Firefly cars have access to more battery swap stations than the first generation? Based on the details we have now, the answer appears to be yes. Future Firefly vehicles will benefit from both the dedicated Firefly swap stations and the broader network of CATL's chocolate battery swap stations, giving them more flexibility. However, the first generation of Firefly vehicles will only be able to use the Firefly-specific swap stations, which haven't even been deployed yet. This is something potential customers need to think about. Ideally, it would have been great if the first-generation Firefly models were also compatible with CATL's swap stations, but unfortunately, it seems like it's too late to make that change. The battery and swap station infrastructure have already been finalized for the current lineup, meaning Nio must now move forward with the existing plans. Now, regarding the 2.5 billion RMB investment, let's clarify that this is an allocation up to 2.5 billion RMB, which means the final amount could be slightly less but will likely be in the high 2 billion range. Importantly, this funding is directed toward Nio Power, the subsidiary responsible for building and maintaining swap stations and charging infrastructure. It is important to note that while Nio Power is owned primarily by Nio, other investors, including CATL, also hold a stake in it. This means that while the funds will significantly benefit Nio Power's expansion, the money doesn't go directly into Nio's core operations. Instead, it will be used specifically for building and maintaining the swap network, which ultimately does support Nio's broader goals. The deal could also have a positive impact on vehicle sales. One of the strongest selling points for Nio's battery swap technology is the convenience it offers. Being able to swap a battery in just 3 minutes is a massive advantage, and with an expanded swap network, customers may feel more confident in choosing a Nio or Firefly vehicle. Looking ahead, we can only hope that future generations of swap stations will support multiple battery sizes. Currently, Firefly needs its own swap stations because its batteries are smaller than those used by Nio or ONVO. However, if future swap stations can accommodate various battery sizes, whether they are large Nio and ONVO batteries or the smaller Firefly and CATL chocolate batteries, it would create a much more seamless and efficient network. The last thing Nio needs is for customers to encounter situations where they arrive in a city filled with swap stations but cannot use them because they own a Firefly vehicle that requires a specific station. That would be incredibly frustrating, and to avoid such issues, Nio must ensure future swap stations are designed to be universal. At the end of the day, the main challenge remains with ONVO. The company has a solid product, but the market is highly competitive. To reach profitability, they must hit 20K deliveries per month, and they are nowhere near that goal. The CEO made bold promises, failed to deliver, and has now backtracked on his resignation pledge. This leaves ONVO in a precarious position where a major reassessment is necessary. Perhaps with the ONVO L90 entering the lineup, there will be an opportunity to push sales higher, but without a strong strategy in place, it's difficult to see them reaching their targets anytime soon. Some critics have even argued that ONVO should be discontinued entirely. While that's a drastic step, if ONVO cannot achieve profitability in the long run, Nio may have to make some tough decisions about the brand's future. That's the latest on Nio, ONVO, and CATL's big partnership. Let me know what you think. Can ONVO turn things around? Or is it time for Nio to reconsider its approach? And what are your thoughts on the battery swap developments? Drop your comments below. Thank you for joining us today. If you enjoyed the video, don't forget to hit the like button and subscribe to our channel for more stock predictions and market insights. Remember to turn on the notification bell so you never miss an update. Happy investing, and see you in the next video.